Imagine waking up a few years from now and realizing that the greatest economic transformation in history happened without noise, without announcements, without wars, and without bright signs saying the world had changed. A transformation so profound it altered how countries function, how governments control wealth, how companies sell, and how people live. And yet, a change almost invisible to the eyes of the average citizen. This is the story of digital money, not the distant future, but the silent present that's shaping the planet as we speak. Just as steam powered the Industrial Revolution and electricity reorganized modern society, digital money is redesigning the global economy in a way so discreet that almost no one perceives the magnitude of what's happening. But to understand this revolution, we need to go back in time, long before digital wallets, before cards, before modern banks. In the beginning, everything was physical. Value needed to be touched to exist. Rare stones, shells, metals, gold, silver, paper. Money was what the hand could hold. And this bond with the physical created a powerful illusion that wealth would always need something material. This illusion lasted centuries. But silently, the world began to free itself from this, and the digitalization of the economy advanced like a slow, steady, and inevitable tide. The curious thing is that the first major form of digital money wasn't a cryptocurrency, nor an app, nor a brilliant technological invention. It was something as simple as numbers on a screen. When banks began recording balances electronically, money stopped being what was in a wallet and became what appeared in an account. Nobody noticed. But at that moment, money stopped being an object and became information. And when something becomes information, it can travel faster, be manipulated more precisely, and transform in ways previously impossible. Over the decades, the world began depending on this type of invisible money. Salaries began being deposited digitally. Purchases began being recorded electronically. Debts existed only as numbers. In many countries, most money wasn't cash. It was data. Still, the population continued believing that money was what they kept in their wallet. But the planet was already moving in another direction. Then came the internet, and everything accelerated. E-commerce redefined consumption. Digital banks eliminated entire branches. Card became universal. The idea that money needed to be physical began disappearing, but in such a natural way that nobody noticed a historic change was underway. And meanwhile, governments began seeing advantage in digital control. The digital economy generates traces, generates data, generates predictability, generates power. And power is something no government ignores. When cryptocurrencies emerged, they weren't just alternative currencies. They were the first explicit shout that money no longer needed intermediaries. A dangerous idea for governments. A seductive idea for populations distrustful of the financial system. An idea that put the world at crossroads. Either the future would be decentralized and democratic, or governments would try to institutionalize their own version of digital money. Something as modern as cryptocurrencies, but with total control. And then something even bigger began gaining strength. Central bank digital currencies, the famous CBDCs. They're not cryptocurrencies. They're not decentralized blockchain. They're money 2.0, but controlled by governments. And silently, dozens of countries began experimenting, testing, and preparing entire financial systems based on digital tokens issued by the state. China advanced first. Then Europe, the US, India, Brazil, Nigeria, and many others. It wasn't announced as revolution. It was presented as modernization. But modernization in the financial world always carries profound consequences. The truth is that digital money changes everything. It changes how people buy, how they sell, how they save, how they invest. It changes the speed of the economy, changes how governments control taxes, changes how crimes are tracked, changes the power of traditional financial institutions, and, above all, changes people's autonomy. Because digital money is, first and foremost, traceable. Every transaction leaves a trail. Every movement leaves a signature. And for the first time in history, governments have the ability to see the entire economy in real time, a power they never had before. But the most impressive aspect of this revolution isn't what's said, but what isn't said. Digital money didn't arrive with fireworks. It didn't arrive with protests, with billboard ads, with grandiose speeches. It entered through the doors of everyday life, through payment apps, through digital wallets, through online shopping, through virtual banks. When we realized it, we were already living in it. We pay bills through our phones, split expenses instantly, buy without physical cards. The economy digitalized without asking permission. And it's exactly this that makes this revolution as silent as it is inevitable. And the most impressive thing is that this entire movement is just beginning. The next phases will be even deeper, faster, and more global. In many countries, there are already policies encouraging the disappearance of physical money. In others, paper money is already practically dead. And when physical money disappears, something much bigger happens. Financial freedom changes. Power changes. The structure of society changes. When we stop to observe the world today, we realize that the transition to digital money isn't just a matter of technology. It's a matter of social structure. Think about how a simple bank transfer, which used to take days, now happens in seconds. The urgency that once belonged only to the physical world now lives in financial flows. Every coffee purchased, every ride, every streaming subscription, everything travels as pulses of information. And this transformed the modern consumer into someone impatient, someone who doesn't accept delays. And as behavior changes, the system needs to keep up. Digital money wasn't born just from innovation. It was born from a need for speed. The global economy became a space where time is more valuable than money itself. A transfer that takes hours means economic loss. A purchase that doesn't approve instantly means abandonment. A company that doesn't accept digital payments loses relevance. And so, silently, the world began abandoning any form of financial slowness. In this new universe, the physical became synonymous with backwardness. The digital became synonymous with efficiency. And efficiency today is synonymous with power. But while the population gets used to the convenience of digital money, there's a phenomenon few perceive. We're becoming increasingly dependent on systems we don't control. When money is in your pocket, it's yours. When it's in a digital account, it exists because a system allows it to exist. When you pay with an app, you're trusting private companies, distant servers, and invisible algorithms. Few people realize that in the digital world, money is always subject to rules, permissions, and limitations that didn't exist before. And this dependence opens space for a completely new reality: programmable money control. Money that knows where it can be spent, when it can be spent, by whom it can be spent. Money that can be limited, paused, redirected, or automatically adjusted by governments or institutions. In countries already testing advanced versions of official digital currencies, there's a possibility of programming money to expire after a certain period, encouraging immediate consumption. There are tests where money can only be used in certain product categories. And if this sounds strange, remember we're talking about an increasingly digitalized world, where everything is configurable, including money. But control isn't always negative. In many scenarios, digital money brings economic justice. It can prevent fraud, reduce corruption, stop fiscal plundering from corroding entire economies. It can reduce government costs, expand access to financial services in poor regions, empower people who never had a bank account. In countries where citizens face turbulent inflation, digital money offers stability. In isolated regions, it offers inclusion. In informal economies, it offers registration and protection. The duality is clear. Digital money is freedom and restriction. It's power and vulnerability. It's efficiency and exposure. And each country decides which side will prevail. And while governments plan their versions, the private sector is already running ahead. Tech companies have become true financial institutions. Today, digital giants know more about consumption habits than century-old banks. Every click, every purchase, every subscription forms a detailed map of the personal economy of millions of people. And when companies have data and payments at the same time, they have something no traditional bank ever had in history: the ability to predict, influence, and shape individuals' financial behavior on a massive scale. This silent power is creating a new type of global currency, not issued by countries, but by platforms. App points, service credits, universal digital wallets, internal currencies of large companies. Although they don't look like money, they compete directly with the financial system. In some countries, there are more people storing value in apps than in banks. And while this happens, central banks observe, analyze, and prepare. Because the moment a private company controls a significant part of a country's economy, the balance of power shifts. Behind all this, there's another even bigger phenomenon: the dissolution of financial borders. The globalization of digital money is creating a planetary economy where transactions know no borders. Today, a person in Brazil buys a product in the United States, pays using a digital intermediary in Europe, and consumes content hosted on Asian servers, all in seconds. Digital money dissolved barriers that once seemed permanent, and this dissolution changes geopolitics. Countries now compete for technological advantage, digital infrastructure, and data control. This means digital money isn't just economics. It's diplomacy, strategy, and in some cases, silent warfare. And at the center of all this is a citizen, the ordinary person, who often doesn't perceive the depth of this transformation. The convenience of paying with a phone seems like just modernity. We don't realize that by doing this, we're leaving behind centuries of monetary traditions and embracing a totally new system. A system where value is information, where spending is tracking, where the economy is a network, not a vault. The new generation is already born into this universe. Children grow up asking to tap the card, without even understanding the concept of money. They see adults bringing their phones close and paying automatically as if it were magic. And when these children become adults, physical money will be as strange as writing letters by hand. However, this transition raises deep questions about autonomy. If money can be tracked, it can be blocked. If it can be blocked, it can be controlled. And if it can be controlled, who guarantees this power won't be abused? In some parts of the world, digital money is already used as a political tool. People, companies, and even regions can be favored or harmed with a simple system adjustment. Programmable money is a double-edged sword, capable of protecting, but also of restricting. Digital money is silently reforming the planet, changing power relations, behavior, and the very idea of wealth. We're living through a transformation as profound as the invention of currency, but wrapped in convenience rather than visible ruptures. Trust migrated from vaults to code, and value began to flow with the speed of technology. While governments, companies, and individuals control and freedom, society tries to keep pace with a system that evolves faster than it does. And when we look back, we'll see we were living to the birth of a new era, an era where wealth stops being something we hold and becomes something that circulates like energy,